IVM.
You're listening to a special edition of Paisa Vaisa featuring Mr. Nithin Kamath, founder of Zerodha, a company that offers brokerage-free equity investments. In the first part of this series, Nithin talks to Anupam about stock trading, the difference between investing and stock trading, and setting up a brokerage.
Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, B50 on Twitter. This is a really special episode of Paisa Vaisa because this time we're going to talk stock trading. We've done so many episodes on investing, okay? We've done robo-advisories with Clear Funds. We've done value investing with Vishal Khandelwal. We even did thematic investment with Small Case. This is the first time we're talking about stock trading, okay? I'm just going to give me 2 minutes to explain the difference between investing and trading, although I'm sure our guests can do much better than me on that. But investing, whatever we've spoken so far is over a specific time frame. It's about investing probably for the long term through SIPs and choosing a bunch of stocks and then sticking on them for a long period of time. Now, that is one way of making money, okay? But we didn't say it's the only way of making money. Stock trading is an extremely lucrative avenue of earning income. Of course, it's also extremely risky. Time horizons are shortened. You can do trading for almost day-to-day, intraday on a lot of stuff in stocks, okay? And that also holds true for commodities and a lot of the other stuff. So I hope that all of you understand the very basic difference between investing and trading. So far, we've done investing, which is over the longer term. This episode is dedicated to stock trading. And our special guest has turned his passion into a business. After many years of trading himself, he actually set up a brokerage, and guess what? He totally killed it. Zerodha today is India's largest discount brokerage, and I'll leave it up to our guest to introduce us to Zerodha, what it means also, the word, and a lot of other stuff. So with me, I have the founder of Zerodha, Nithin Kamath, and we are going to do this podcast in 3 parts. In the first part, we are going to cover Nithin's really fascinating journey to setting up Zerodha. I know a lot of listeners out there are interested in entrepreneurship and stuff like that, and believe me, Nithin's early career could probably take an entire hour, but we're going to spend just about 20 minutes on that for the first part. In the second part, we are going to cover stock trading basics and what you as a listener need to know if you're interested in starting to trade on your own, right? And finally, in the third part, we're going to do really basic stuff about how to choose a stockbroker. So enough of the intro. To our guest, Nithin, welcome to Paisa Vaisa. We're really thrilled to have you here. I'm going to give the mic to you. This is all yours. Tell us the story of Zerodha, of you, your early career, how you got interested in stock trading, what led you to make Zerodha, to make it into a business, and of course, what does Zerodha mean? Thank you for doing this show.
Yeah, thanks, Anupam, for having me here.
Sure.
So firstly, I think the disclaimer is anything that you invest with an idea to exit is a trade, actually. You know, so if you're buying into something without an idea to exit, maybe that's called investment, right? And everything else is a trade.
And for a lot of people, trades turn into investment. They buy something, they hold on to it, and guess what? The trade becomes an investment. It's thin line. Sure.
Right, absolutely, yeah. So I started trading extremely early, and I'm from Bangalore, and so the area I was staying in was full of Marwadis, so I had and
shop people
and etc. So they introduced me to trading. Some of my friends, older friends.
Which year are we talking about?
This is 97, 98 kinds.
Sensex was going nowhere at that point of time, ups and downs and stuff. Okay,
Right.
Dream budget, I think, round about that time.
Dream budget was, I think, 94, 95. So that's how I got introduced to trading, and it started off in what they call as the dabba shops and the bucket shops. So in 2000, derivatives trading started in India. So that's when I graduated to come on the exchange and start trading there. So people who don't know, today 85 to 90% of the trading turnover on exchanges comes from futures and options, right? So Nifty futures had started in 2000, and And the thing about derivatives is it's a leverage trade, right? As in with 1 rupee you're buying for 10 rupees, vice versa, right? So
let me actually explain that to listeners out here.
Right.
Let's say the Nifty was at 2000 then, and when you're buying a contract of say 100 Nifty,
Right.
okay, for a future or for a call option, whatever it is, so you're actually taking exposure to 100 into 2000.
correct.
For that, all you're doing is you're paying a small premium.
Absolutely.
Okay, so folks, that's what leverage means. You're paying a small premium to take a large exposure.
Correct.
Go on.
Yeah. So for example, as I said, so for to buy 2 lakh rupees worth of Nifty, you're paying 10%, 20,000 rupees. Now the good news here is, if you make money, you make money 10 times faster, and you lose money 10 times faster. So in 2001, around this whole Y2K bust that was happening, so I had saved up quite a bit, between 97 to 2001, and that was around the same time I was doing my engineering as well, so. In 2001, so I went bust on one of those stupid trades.
I need, okay, folks, I'm going to take just a pause out here because it's very important for listeners to understand what bust means, okay? It's easy to get swayed away by all the success stories. I want to spend just 2 minutes, define bust for me as an engineering student who's bet all his money on a certain position. What is that?
Yeah, so bust was, I think saved up between 4 to 5 lakh rupees.
Oh man,
yeah,
that's a lot of money. Okay,
yeah, and started with like 5,000, 10,000 rupees, and back in 2000, 2001, 5 lakhs was probably today's maybe 50
a lot of money then, a lot of money now, even if you don't account for inflation, okay, for 5 lakhs.
Yeah, so I was long into the trade, so that means I was bullish about, so markets came down, so I thought it's gonna stop falling, so I bought, it came down more, it fell more, I borrowed money and I thought,
you doubled down.
Yeah, I did all of that stupid things, so eventually I ran out of the 5 lakhs plus I was down. I owed money to people. So I had to find a job, and call centers were the in thing then.
Right.
And it also kind of gave you the flexibility to work in the nights and trade during days. So I joined a call center in Bangalore.
You didn't sleep. I mean, work during the day, trade during the day. Both are intensive activities.
No, and when you're young and you're stupid, I mean, I used to sleep weekends. So and I did this for like 4 years, from 2001 to 2005, I was working in the call center and trading the markets. And 2005, I was at a gym. I met this guy who had come back from the US, and it was just a coincidence that we were on the treadmill next to each other. He asked me, "Dude, what do you do?" I said, "I trade." Then I used to trade with ICICI then. And we caught up for a drink, and then I showed him my trading account performance. He said, "Dude, why don't you do this for me?" And he cut me a check, and I quit my job the next day. And that's where this whole business of trading for others started.
Right. Okay.
And so 2005 was when this happened. And 2006. I became a sub-broker for Reliance Money. Reliance Capital started their brokerage business in India in 2006 called Reliance Money. So I became a franchisee for them, or sub-broker as they call it. And in 2008, markets fell. That was probably the stupidest year to make money because... most people don't realize that you tend to make money faster when markets fall as a trader, right? If you're in the right direction, it's like potential energy is in your favor, right? It's 2008. I made in that day's context a lot of money.
Okay,
and I said, and day trading is like playing a T20 game. You cannot do it for too long. You have a shelf life and etc. Right? So I wanted to take a break from trading.
Okay, I'm going to just pause you out here. Tell me one thing, because you're saying that in 2001 you got the markets wrong.
Right.
Okay, I'm guessing you had about 4 or 5 years for you to figure out your strategies and your thinking before your friend or whoever it is came to the gym and gave you a check.
Right.
What did you do differently, right? So that when 2008 came, you were like really set to take that one bet.
Right.
Okay, that would have, I'm sure, like you said, made you a lot of money.
Right.
Okay, because it takes immense amount of skills.
Right.
Like you also said, if you're doing full-time trading, you're looking at a crazy day.
Correct.
I'm guessing you're looking at 8 hours of trading to hai वैसे भी, probably even more beyond that starting. So can you just explain to our listeners, how did that entire cycle change for you? Where did it have it in you to say, okay, I went bust, but I'm going to do this. I'm still going to do this. Because for a lot of us, a lot of people, taking a loss, especially if you're from a middle class background, I'm sure that's what I read is because you are also from a middle class background. I believe your dad was working in a bank,
right?
Mom was a teacher.
Right.
So that risk-taking ability, which I believe, and I'm sure you'll agree, is very core to a trader's mentality.
Absolutely.
How did you develop that all the way from 2001 going bust to finally, I could call it like breaking the bank with a fantastic trade in 2008, where you called it right. Just take us through that.
No, I mean, I think, see, as a trader, I think the lesson I've learned going bust in 2001, and in between 2001 to 2005, I had a few episodes as well.
You're talking it so casually, like going bust is okay, no big deal.
No, I mean, I at least had a job then. So,
correct.
Going bust.
So, folks, that's your pro tip number one. Have a full-time job, okay, if you're new to trading.
Absolutely. I think, if someone's learning trading, making a living out of trading is extremely tough, right?
Okay.
If you have to put food on the table from the money you make trading, I think you should give yourself at least 5 years before you attempt to do it.
Okay,
right?
Sure.
And so I'd say I think what I learned during that volatile period was that you can't be aggressive, while trading. You can't have rupee goals. You can't, you just have to do the right thing and hope, luck hits, right? And luck hit in 2008, as in the sense, so you can't really, because you have to keep doing right things over and over again. It's just the big problem most people who trade the markets have is that they like to go against the trend. Right?
Yeah, it's so tempting, right? Because they keep on saying trend is a friend. So I'm saying that if I'm in 2008 at the peak, the market peaked on 8 Jan 2008, when just when the Sensex was at about 20,873 types. Right. Why would you take a sell call?
No, I mean, no one could have.
Yeah.
I mean, not a smart trader would have taken a sell call. The sell call wasn't there. The sell call was after markets cracked 10%. Right?
Okay.
Because after the markets cracked 10%, I mean, I'll tell you the strategy in 2008 we had, right?
Please,
So I used to subscribe to various news wires, right?
Sure.
As in from different parts of the world. And so we were essentially just shorting on any news. If a prime minister in UK got sick, we used to go short the market.
Whoa.
In the sense, because there was so much panic, right? As in, people were, the movements were so exaggerated on the short side, for any news, any bad news. So we were just doing, that was the only strategy, right? As in, we knew,
and it just worked.
It just worked because people were panicking, and they were panicking for every reason that's got nothing to do with the Indian stock market.
Yeah, you're talking about the global financial crisis, full-blown regulators everywhere in chaos.
I mean, as I said, it was people who were short that year. I mean, it didn't matter where they were short. I mean, but you couldn't time the short in January because there's no way. I mean, the guy who even shorted at the peak, I don't think he would have been a smart trader, so he wouldn't have actually stuck around the trade.
Right, and he would have just got it out of pure dumb luck.
Yeah.
He just would have taken some kind of call on that, saying that maybe the market will fall, bought a put option or something of that sort, or maybe short sold the future.
No, if the idea in a trade is not right, as in if the market's peaking today and you're actually buying puts, that means your idea of the trade is not right?
That's interesting.
If your idea of the trade is not right, you're not going to stick around till the trade plays out, right? Because, I mean, you probably exit it much before it can show its true potential, right? So, and also the thing about bear markets, right? Bear markets last much shorter, right? And then there's so much more in favor of the trader, right?
Yeah.
So
history shows us that. History shows us that bear markets are in fact, they are of that duration.
Right.
And if you catch a trend, right? Yeah, you're right about that. Go on, please. Yeah.
And also the thing is, in a bull market, what happens is every day, the time taken for a stock to go up is so slow that every day you get an opportunity to actually put your brains and say, should I hold? Should I exit? I have 20% profit. Should I book out? It's very tough to sit on a trade. As an investor, you're not bothered, right? But as a trader, it's very tempting to get out as soon as you're in the money, right? So the good thing about a bear market is when it falls with so much intensity so fast that before you actually have thought about it, it's already made you so much money, right? So so
this was 2008.
2008. So in 2008, also what happened was Nikhil, my younger brother, had joined me by then. And he's 7 years younger, and you can call it evolution or what, but he was a smarter trader than I was. So and then at that time I realized that there's no point two people sitting and trading.
Sure.
And maybe he was just so raw and young, and so I thought he's a better bet to trade, and I should maybe give a shot at being a broker.
Okay.
And I wanted to take a break for a couple of years. I mean, that's when how this whole idea of Zerodha came by.
Right.
The idea of Zerodha was there from 2007.
So at the peak of your trading days, okay,
Yeah.
I want you to give our listeners an idea what your day was like.
Right. I mean, it was
No,
it was
I
crazy.
want them to know how much it takes because
Right.
everybody is so attracted by making money.
Right.
Okay, I want you to give an idea of the hard work it takes.
No, I mean, I'll tell you. There's this quote, right? Stock market's the toughest place to make easy money. You know,
Okay.
So they would start, like 6:37.
Mm-hmm.
And I used to like to work out before I traded because it keeps you sharp.
Sure.
And so 7, you kind of come in, you start tracking what's happening across the world. Right, markets used to start at 9:55 then.
Yes.
So eat a good meal, have a good breakfast.
Huh.
Right, and then you come in, and so the thing is, one of the things I realized that when I started off, I wanted to trade everything.
Correct.
Right,
Yeah.
and then slowly I realized that you need to have an edge in what you trade.
Huh.
Right, so it kind of boiled down to trading only the index contracts.
Okay. So no stocks,
No stocks at all.
anything else like commodities or anything even that.
Yeah, no, the commodities. I mean, in India started very late, right? As in,
Correct.
So
and they're not as liquid also, I guess, as compared to.
No, today they are. I mean,
Okay.
crude oil, gold, etc. is quite liquid,
Sure.
right?
Okay.
But then, when you're trading commodities, right, you're actually competing against the world, right? When you're trading crude, you're actually competing that guy in Saudi Arabia who already maybe knows more than you.
Okay, so 10 o'clock, okay.
Right, so
Index contracts.
Index contracts, and there was no bank nifty. There was essentially just nifty contracts, So I mean, after that, I used to be a scalper kind of a guy. So I used to have a positional trade, which is positional trade would be something that could last a day or sometimes last a few weeks. So, but I also always used to have a day trade running.
Okay.
The reason for that being that. As a trader, right, it's very tough to keep quiet.
Sure. Okay. You always want to trade something.
Yeah.
You see the price action on the screen,
right,
and you want to hit that.
You want to, and so I used to just to keep my adrenaline low. I used to always trade with 1 or 2 lots, all the time. So just to keep me busy,
Okay.
and not think about my positional trade.
Right.
And I think one of those things that I've learned, as in even today as a business, I think it's worked for us is that. You cannot, it's about bet sizing, right?
Right.
You cannot all the time bet the same amount.
Okay.
Right. So you need to know which trades you kind of take it easy and which trades you kind of hit it hard.
You go all in, yeah.
I mean, you have to. I mean, in this business, if you are gonna, if you're gonna bet the same amount of money all the time over and over again. It's not I think personally I've seen a lot of profitable traders. I think it's very tough to actually eventually make money. So
Okay.
So I think
So you do the trade. You're done by 3:30.
Yeah, 3:30 the market closes. But then if you have a positional trade open, you're constantly bothered about what's happening in Europe, what's happening in the US,
and how it would affect your trade. Yeah.
Yeah. So you're continuously kind of.
Mentally or somewhere else?
You're mentally always somewhere else.
Okay,
So it's very tough, and especially if you're sitting on a losing trade.
Okay.
Especially when you're having a drawdown. So all of this,
that hurts,
it just puts a lot more pressure on a trader.
Okay. So 2010.
Yeah. So 2008 is when this happened. 2009, what happened was there was a phase before the election results in May, right?
Where markets gap down.
No, actually, on the election result day, market did a 20% up.
Gap
right?
up, yeah.
Gap up, right?
Yeah.
And it hit circuit in 5 seconds, and the next day morning again hit circuit. So it actually did 2 circuits up, consecutively. So what happened was one of the positional trades I've always taken is to trade the volatility, because I've found it much easier to call than the direction.
Okay.
Right. So that means you're trying to predict if market's going to be volatile within a range, and not really call if it's going to be up or down.
Sure. So you would be like what, long the index and then buy a put or something?
No. I mean, if say you think if market's going to become extremely volatile, you buy you figure out the best strikes and you buy calls and puts together.
You do a triangle. Okay.
Yeah.
Sure. Okay.
Yeah. Or you short them.
Okay.
Right.
Sure.
So what happened is the day before the election results. So I was long volatility. Right?
Okay.
And at around 3:20 p.m. So I somehow, some stupid thing went into my head, and I said, let's just, market's too quiet, because in long volatility, if market doesn't do anything, you lose a lot of money.
You lose a lot of money,
right? Especially on election days, right?
Yeah. So you've got a big event coming.
Right.
You want to be long volatility because you know that the market's going to move in one direction or the other direction. It will certainly not stay flat.
Correct.
So you're playing that move.
I'm playing that move, but then everyone's playing that move, right? So the premium's already priced in the volatility.
Correct.
Right? So unless the volatility that tomorrow happens actually more than what everyone's priced in, you still lose money, right? So, so around 320, we squared off our position. So next day, in 2 days, it would actually return 10x.
Wow.
Money, because we've never seen 2 circuit up days ever in history. Right. So what happened the next day when the market opened? It opened circuit up. They shut down the exchange.
Yep.
Right. So we pulled down the shutters of the office. We went to a resort near our office, and we got drunk.
Okay.
And there, in that whole frustration of missing out,
your positions were closed.
Yeah, because it was
10 minutes if you had just. Yeah, that must have sucked. Okay.
Yeah, so that's when I said I want to take a break from trading.
Okay.
And so that was the day. The election results was the day when I pulled the plug, on my trading.
Sure.
I haven't actually placed a trade after that.
Okay. Yeah.
And that's when the whole idea of Zerodha was always there. We wanted to be a broker for traders like us, which is F&O traders, who offered a platform, no research calls, nothing. I just wanted an execution platform.
Why would you, you've got the Maharathis of broking out there.
Right.
You've got HDFC Securities, you've got Motilal, you've got ICICI, you've got all these people.
Right.
What made you actually say that, okay, I'm going to break that market,
I mean, everyone I went, spoke to, said, dude, it's stupid.
Okay.
to think that you can be a broker, right? And I had a lot of friends in the broking fraternity then.
I'm sure you would, yeah.
So they all said broking is not something that like a 28, 29-year-old can just go and attempt doing.
And less than 30 at that time. My God, okay.
And also the thing about, people just scared the hell out of, what exchanges, SEBI, etc. are, right? I mean, they just made these guys into monsters who will just eat you up, So I think, what do you call? I think you need to be stupid sometimes in life, right?
Okay.
I mean, so I think I was stupid, extremely stupid to start this business. Not just because these guys said so, but it was also the worst times to be a broker.
Yeah, there's no trading, right? Because you're looking at 2009. I think the market was bottoming around March at that time. Although you did have circuit up at that point of time, but business wasn't exactly rocking at that point of time.
The worst time brokers have had in like the history of broking was between 2008, once the collapse happened, till 2010-11. Right, so it was probably the worst time to actually start a broking business.
Yeah, okay.
Right? Because every broker was trying to go out and do other things. India was doing real estate, IFL was trying to do wealth, insurance, etc. So, I mean, all the guys who were there in the system, they were trying to diversify.
Okay.
And I think, the opportunity we kind of spotted that time was NSE had started a trading platform called NSE Now.
Okay.
And NSE Now was like this white label platform which NSE powers, and NSE was giving it free of cost to anyone who becomes a member on the exchange.
Okay.
And I've always been one of those guys who tries out everything, and just keeps a tab on everything that's happening in the market. I probably have accounts with every competitor of ours.
Okay.
So NSE Now, what happened was in 2009, NSE Now suddenly showed improvement over all the other platforms in terms of how fast it was. So the opportunity was just not Zerodha as F&O, etc. But you still need money to drive a business like this, right?
Yeah,
and money is around technology, right?
Yeah.
So I said, dude, no, technology is coming free of cost. And so what is really the cost to run a business, And
but you had your own technology, you're saying, because if
we didn't.
Because if you're going to run a brokerage, you need to buy softwares of Omnisys and that kind of stuff.
So NSE was giving it for free.
Right?
Okay.
So
the only reason we are into existence is because NSE decided to give out this trading platform called NSE Now for free of cost.
Talk about timing and the bear markets, man. Okay,
right,
sure, yeah.
And I think we were the first ones to spot it. Right. So when we started the business, I mean, the whole idea was offer this NSE Now platform which is free of cost. And as a broker, you also need something called as a back office platform.
Yep.
To process all the trades and make out contract notes, etc. So The back office vendor I went to, I was his first client. So he gave it to me for free.
Okay,
you
great.
know, so NSE, you know, when I went pitch them the idea of saying what Zerodha is going to be about, they waived us off membership fees,
Which is a big amount, if I'm not mistaken.
No, it's around
At that
10,
time,
it's around 10 lakhs.
Sure,
you know,
sure.
so
No, I'm thinking a BSE card at one point of time used to be like crores of rupees and stuff like that.
Yeah,
of course, now it's
yeah.
much cheaper.
yeah, correct. You know, no, I mean even now it's 1.5 crore.
Okay.
As deposit to the exchange to become a member on the exchange.
Sure.
So I think when we started the business, we had around 1.7, 1.8 crores. So 1.5 crores went as deposits, and we had like 25, 30 lakhs left to do this business. And thanks to the back office vendor who gave it for free.
Sure.
NSE now coming at free of cost. We were able to actually get started, and from the day one, the idea with Zerodha was to be different from our competitors, in every way, right?
Right. And you knew all that because you have accounts with them. You knew exactly where the gaps were. You're a trader, so you know exactly what you're looking for.
Absolutely. I think like trading, business, it's all like being in a sport, right? As in, you need to have an edge to kind of win the game, right? As in, if I am 6'5" and I'm trying to be a gymnast, I can't, right? So I think the real value that Zerodha brought in was is that all of us have been traders, whoever was there in the beginning, right? So 2010 August is when we started the business.
Sure.
And Zerodha, again, we didn't want to have a money, rupee, etc. in our name, right? Because we didn't want to come across like a platform who's gonna suddenly make you money, right?
Okay, yeah.
Or so like
Zero is a nice place to say that. But okay.
Yeah, so it's actually Zerodha is actually zero and Rodha.
Okay,
right.
Okay.
Rodha is barriers in Sanskrit.
No barriers.
Yeah.
Zero barriers.
Zero barriers.
Lovely. Okay.
Right, so that's essentially what we were trying to attempt.
Okay.
While setting up the business, to say that how do we kind of take out all barriers traders have.
Sure. Okay.
Right. And so that's essentially so how the journey from trading to starting of Zerodha.
Okay, I want to end this on just telling us the size of Zerodha, right? Because we started on 2010.
Right.
What have you achieved in 8 years? The numbers are mind-boggling. Tell us about whatever you can. That is revenue, number of clients, market share, whatever.
Yeah. So firstly, I think when we were starting the business, I met VCs, etc. So I think if I was a VC, I wouldn't have funded myself.
Okay, that's being pretty frank. Okay,
because I didn't really come from pedigree education, or I didn't really have a proper business plan, or I didn't really have experience of running a brokerage firm. So a lot of credit today is given to us because we've been able to grow the business without raising external capital. So
this is bootstrapped.
This is bootstrapped
entirely.
Right? Entirely.
Holy
right?
wow. Okay.
So there is no debt. There is nothing. So today, so we are closing on 800,000 clients.
800. Okay,
yeah,
sure.
So
even if half of them are active, you're looking at 5 lakhs straight away.
Exchange has this data point they put out, where they say active traders per broker. So I think we are closer to 500,000 there.
Wow.
And we are right now, I think, number 3 behind ICICI and HDFC. In terms of number of active clients.
Okay.
Number of
8 years.
Right.
You've gone to number 3 on number of active clients. I'm not even coming to the market share by volume. We'll come to that.
Right.
I'm saying in 3 years you've hit number 3.
Right.
8 years. Sorry, in 8 years you hit number 3. Okay.
And number of trades. We're by far the biggest in India. So
wow.
I don't think there's anyone even anywhere nearly close.
Number 2 is what, half your size or something? I don't know.
It may be. It possibly. So because there's no. I know my size versus exchange. In exchange, half the trading comes from retail trading.
Correct.
So in that half, we contribute almost between 8 to 10%.
Wow.
So that is
You're 5% of volume.
5% of exchange today.
10% of 50%, right? Because wow, okay, that's a huge thing.
I don't know. It's been quite a crazy ride. I think for us the real. I think the last 2-3 years has been quite good.
Okay.
And revenue, I think we're closing on. I think this year will be between 450 to 500 crores of revenue.
Wow.
And
that's by charging zero brokerage. Anyway, I get that. Okay.
Yeah.
Okay. 500 crores of revenue. I'm sure you're already hugely profitable because
So I think pre-tax we will probably do 230 to 250 crores this year.
Okay. Fantastic, folks. I really wanted to spend much more time out here, but I think we've already exceeded. We exceeded our limit. Like I said, Nithin's initial, the entire entrepreneurship journey and his career and how he started Zerodha is just so fascinating. It could form an entire episode on its own, but we've got other things to talk about. So we're going to wrap up first the first part of a 3-part series on that. In the next part, we're going to talk about stock trading basics and strategies. You want to stay tuned for that.
Thank you for listening. If you have any money-related questions, you can tweet to us at IVM Podcasts or email us at paisavaisa@indusvox.com.
No material on this show should be considered as financial advice. The material on this show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
There she stands, a podcast addict. Outside the bank, having travelled several miles to get in with other poor souls like her. The journey, though daunting for this youngling, will have some comfort because she has downloaded her favourite podcast. You can see more of her species on ivmpodcasts.com, your one-stop destination where you can check out the coolest Indian podcasts. Happy listening.